You walk into a bank, deposit $1,000, and walk out thinking your money's safe. That's what we've all been told, that the bank holds on to our money and gives it back whenever you need it, right? But here's what they don't tell you. The moment you deposit your money, the bank turns and lends most of it out to someone else. Sometimes all of it, legally. They're not holding your money, they're multiplying it on paper out of thin air. It's called fractional reserve lending. And once you understand it, you realize this isn't just risky, it's a legalized con job. Fractional reserve lending is the idea that banks only have to keep a fraction of your deposit in reserve. Let's say you deposit $1,000. The bank is allowed to keep just 10%. That's $100 and loan the other $900 to someone else. That borrower spends the $900, and then the person who receives it deposits it into their bank. Now the second bank keeps 10% of that, or $90, and then loans out the $810. This process continues and plays out about 28 times. And your original $1,000 suddenly becomes nearly $10,000 circulating in the economy. Sounds like magic? Well, it's not. It's inflation in disguise. This system doesn't create new value. It just creates more claims on value. More digits, more promises, and the economy gets flooded with money that doesn't actually exist. The entire thing rests on one assumption, that you and everyone else won't try to withdraw your money at the same time. Because if you do, the bank collapses. It can't give you what it doesn't have. That's not stability, that's a house of cards. And it gets even better. In March 2020, while everyone was distracted, the Federal Reserve quietly eliminated reserve requirements completely. That sounds insane. That's right, the US banks are now allowed to keep $0 in reserve. Your entire deposit can be loaned out. Nothing is guaranteed. There's no safety net. It's all faith, blind faith. Imagine you give your gold to a trusted goldsmith for safekeeping. You expect him to guard it, right? But instead, he lends it out, hoping everyone doesn't ask for it all back at once. That would be fraud, correct? But when a bank does it with your cash, it's legal. In fact, it's a standard practice of theirs. This isn't capitalism. This is a government-sanctioned illusion that benefits banks and leaves the average person holding the bag when it all goes sideways. Now, defenders of the system will tell you, well, fractional reserve lending stimulates growth by making more credit available to everyone. But credit based on real savings is very different from credit based on leveraged promises. When lending is this easy, it leads to asset bubbles, unsustainable debt, and massive financial crashes. Sound familiar? 2008 ring a bell? But the good news is there are alternatives. We could demand full reserve banking, where banks can only lend out what they actually have. We could move towards sound money, which I am an advocate of. Gold, Bitcoin, or any system where value can't be created with a keystroke. Or at the very least, we could demand transparency. Let the public actually see how much of their money exists and how much has already been lent out. Fractional reserve lending is like building a skyscraper on quicksand. It looks strong until the quake hits. The system isn't sustainable. It isn't honest, and most people don't even know it exists. Now you do. So the next time someone tells you the bank has your money, you'll know better. Thanks for watching, and let me know what you think in the comments below. If you got some value, please subscribe, and I'll catch you in the next video.